हेलो एवरीबॉडी। एक बार फिर से आपका फाइनेंशियल फ्रीडम विद प्लैनेट वेल्थ पॉडकास्ट और यूट्यूब चैनल में आपका स्वागत है। मैंने जो आईपीओ सीरीज नई शुरू की है जिसमें मैं वेरियस आईपीओ की एनालिसिस करता हूं और मैं उसकी इंफॉर्मेशन आपके सामने रखता हूं वीडियोस के थ्रू सो दैट यू कैन डिसाइड वेदर द आईपीओ इज राइट फॉर यू टू इन्वेस्ट और नॉट। उसी सीरीज के अगले वीडियो में जो जोमेटो का नया आईपीओ आ रहा है उसके बारे में आज की वीडियो में हम बात करेंगे। I am Brijesh, father of two lovely kids, husband to a loving woman. I am an edupreneur, now turned into a wealth coach, and I am on a mission to help like families like yours to live a financially very free life and achieve financial freedom during their life. तो इसी मिशन को आगे ले जाने के लिए ये जो पॉडकास्ट और यूट्यूब चैनल चला रहा हूँ फाइनेंशियल फ्रीडम विद प्लैनेट वेल्थ, उसमें एक बार फिर से आपका स्वागत है। चलिए देखते हैं कि जोमेटो का आईपीओ हमने और आपने सबने जोमेटो में ऑर्डर करके खाना खाया होगा, आई एम श्योर। तो चलिए देखते हैं कि वेदर यू शुड हैव जोमेटो ऑन योर मेनू, इन्वेस्टमेंट मेनू और नो, उसके बारे में आज समझने की कोशिश करते हैं। So Zomato, as we all know, it needs little introduction. कोई introduction की आवश्यकता इसकी नहीं है। The company operates mainly in the food delivery business, linking restaurants and customers through its mobile app. The company earns its revenue in the following ways. Number one, commission that the restaurant pays to Zomato. So when a customer orders a food from a restaurant via Zomato, the restaurant pays commission to the Zomato for bringing that customer to that restaurant. This commission is a proportion of the order value. Higher the order value, the higher the commissions earned. This is the primary revenue source, making up about 88 to 99% of Zomato's revenue. The second source of income is advertisement that restaurants feature on Zomato's platform. So there are many restaurants who are advertising their offerings on the Zomato's platform. These accounts for around 15 to 20% of the Zomato's revenue. The third model revenue stream is subscription fees from Zomato's Pro membership plan. These hold a minor share in revenue at less than 5%. And the fourth revenue stream is B2B business of supplying the restaurants with inputs restaurants need, such as vegetable and other food products. So the Zomato also earning from B2B, that is supplying raw material to the restaurants and earning from that. So these are the four major sources of revenue, and as we can say, its primary source of revenue is the commission by Zomato earns from clients ordering through their app. Let's understand the Zomato story. Right? It's a unique, we all know. Zomato's appeal lies in its ability to proxy an item of consumption that is undeniably taking up an increasing share of the Indian consumer's wallet eating out. So the Zomato is a proxy if increasingly the Indian consumers are eating out, and it is basically participating in that consumption story which is being offered by the Zomato. App-based business like Zomato also derive their growth prospectus from the young, affluent, digital-savvy, and upwardly mobile working demographics. Listed consumption players like whether it is FMCG, durables, or restaurants and hotels do not offer such a focused play on this demographic play. Zomato is fundamentally a tech-enabled business, making it scalable and adaptable to changing market scenarios. So it's highly flexible, adaptable, and scalable, being a tech-enabled company. It operates in almost duopolistic market. So there is only one competitor as of now for the Zomato, which is Swiggy, and other players have folded up there or have been bought out by either Zomato or Swiggy. It taps into growing consumer spending segment and one that is in a nascent stage. So there is a long way to go on the consumer base which are using Zomato. It offers a better play on food services and dining out than current listed players who are limited to traditional quick service restaurants and restaurant chains, which are hamstrung by high fixed and available cost. Right. So the other quick service restaurants, if we take the example of McDonald's or Domino's franchises, you would realize that they have a very high fixed and variable cost associated with dining. Whereas in the case of Zomato, there is no infrastructure cost is required on their part. Tech-enabled businesses such as Zomato tend to be evaluated purely on their ability to grow their customers and top line, and to build a network effect that makes it near impossible for users to leave the platform. Now let us see how Zomato fares on these metrics. Let's understand the consumer growth. So as you can see on the chart screen पर दिख रहा है आपको, you can see that in the FY18 it had a monthly active user base of around 13.8 million. In the FY19 it increased to 29.3 million. In FY20 it reached to 41.5 million, and in FY21 it reached to 32.1 million. So you can see that it is growing except FY21. That is because of the pandemic. Monthly transacting users, the users who are ordering on the platform. In the FY18, it had 0.9 million monthly transacting users. In the FY19, it had 5.6 million monthly transacting user. In the FY20, it had around 10.7 million monthly transacting user, and in FY21, it has 6.8 million monthly transacting user. And the conversion, if we talk about the ratio of conversion, who are buying, ordering foods on the Zomato app. In the FY18, it has got around 0.9% of the monthly active user transacting on the platform. In the FY19, it got increased to 5.6. It's almost a 5 to 6 times growth. In the FY20, it has a 100% growth. And FY21, because of the pandemic, it got reduced to 6.8 million. So you can see that there is a huge customer growth coming on the Zomato way. What is average order value? So you can see that here is a chance of quarterly average customer order value. In the June 90, it had around 264.6 rupees average order value, and in the March 21, it has increased to 395.4 per order value. So you can see that it is able not only able to convert the customers visiting the app, but the Zomato is also successful in enhancing the per transaction order value as well, which is a growth story. Now let's try and understand the economics of the business, right? Unit economics, cost and revenue. So you can see that in FY20, it has around minus 3.5 rupees per order loss. So per order loss was around minus 30.5 rupees. But you can see that it turned around in the FY20. Per order profit was around 20.5. So now you can see that per transaction, whatever it is earning, there is a delivery cost associated with which the Zomato pays to the delivery partner. So you can see that there is a delivery cost reduction between FY20 and FY21 of minus 12%. Commission, it was paying commissions 43.6, now it has increased to 62.8. Discounts 21.7, now it has reduced to 8.3%, so there is a reduction of minus 61.8. Other variable cost was around 15.7, now it is 15.3 million, so there is a change of minus 2.6%. And customer delivery charge was customer delivery charge, which the charge which was charged from the customers was around 15.3 rupees. Now it has increased to 27 rupees per delivery. So you can see that income variables are increasing and the expense variables are decreasing. So because of this change, the Zomato was losing rupees 30.5 per order in the FY20. Now in the FY21 results, you can see that it has turned around. Now it is making operational profit in the rupees 20.5 per transaction, right? Now let's try and understand the profitability and revenue. So you can say that Zomato is not making any profits, right? You can see here in the March 20, the total revenue was around 2604, and in March 21, the total revenue was 1993.8 million. Other income and the total income was around in the 21 2118. In 20 it was around 2742.7 million, and in the 19 it was around 1397.7 million. Purchase of stock in trade, you can see. And now if we deduct the expenses from the profit, you can see that EBITDA level profit in the March 21, it has around minus 342.5 million rupees loss. In the March 20, it was around minus 2166.7 million EBITDA loss. So you can see still it is making loss. as I shared in my introduction, so this is not a profit story as of now. This story is creating a network effect so that the Zomato would be earning down the line. Now, diversification, how Zomato is doing diversification. So, Zomato's core proposition is in the delivery service, but the company has tried to diversify away from this one segment to reduce concentration and tap other revenue streams. One avenue that appears to have started well is its B2B segment, through which it supplies ingredients such as vegetable, meats, groceries, and packaging, and so on to the restaurants. This segment also saw lower impact from the pandemic than the delivery business. The company reduces the cost of this input supply service from the restaurant's order value commissions that restaurants owe it, which allows restaurants to fund their working capital cycle a tad more effectively. These may improve the value proposition offered by Zomato to its restaurant partners, which has so far been born of contention. This segment was launched in the 2019 and now accounts for about a tenth of the sales. Zomato also started offering and shuttering down its grocery delivery services. So Zomato markets during the pandemic. It said to acquire a stake of 9.25 and 9.27% with two Gophers entities for their groceries delivery business and B2B warehousing and trading businesses. So the Zomato failed in launching its own grocery delivery services, but now it is acquiring stake into the Gophers entities. So it is also diversifying. Funding strength. So basically, in the startup, initial this kind of networking and app-based startup, the important thing is how much transacting customer the platform is acquiring. So they create a loyalty. They try to create a loyalty by offering certain amount of discounts, certain amount of below the cost delivery mechanisms. So they need fund to acquire new clients and grow and create a network effect. So Zomato has already raised, they need money for that. So Zomato has already raised rupees 6,608 crore last year from a cluster of PE investors. It is now raising rupees 9,000 crores through this IPO. Both give it a firepower to continue spending on customer acquisitions and engagement through heavier discounting and marketing. The company also intends to use 75% of its new proceed to fund the inorganic growth. This cash pile holds Zomato in good stand for the coming years, even if global rate rises and stimulus reversal shuts off the flood of abundant funding which the Zomato currently or all startup currently enjoying. So to put everything explained into this point is a nutshell. Zomato is seeing strong growth in its customer base and its customers are spending more. It has managed to control costs enough to improve the economics of each order and brought down losses. And it has begun diversifying into related avenues to tap more opportunities and most importantly, built up a cash reserve to fund their future operations and expansion plans. Now, after understanding the business and the strength and the business philosophy of the Zomato, now let's try and understand the risk which Zomato is facing. So you must understand the risk because you are thinking about whether to invest into Zomato or not. The first risk Zomato is facing is competition. Right? So Zomato, despite its diversification plan, it's still heavily dependent on the online food delivery space, which is its core business. It needs to acquire and retain customer and push them to spend more from existing market if it has to grow. Its city strength is matched by Swiggy. Its international diversification has not taken off. Amazon, with its deep pockets and India focus and delivery strength, is all set to enter the same food delivery space. All this means stiff competition for Zomato for its existing user base. So it's a delight for the customers like you and me, but it may be a challenge for, maybe a risk for the Zomato business. Uncertainty. Predicting the company's growth trajectory is hard because of the many moving variable influencing it. The inorganic route to growth where Zomato experiments with unrelated lines of business like grocery delivery creates more uncertainty on this front. Zomato has failed on acquisitions in the past both globally and locally. Acquisitions may entail heavy spending that pushes back the path to profitability of its core business. Should it acquire bigger stakes in growers, for example, it could mean heavier spending to compete with the Tata-backed Big Basket or Reliance Industries own delivery businesses. So there is a lot of uncertainties going forward in the business cycle. Losses. By the conventional yardsticks used by the equity investors, Zomato wouldn't make it to any quality shortlist because it is making losses. It is loss making at both the EBITDA level and the net level and will continue to remain so for the foreseeable future. Normal valuation metrics do not apply here. With Zomato like companies, unlike your usual stock investments, you are not paying for a share of earning or its ability to compound in the foreseeable future. Instead, you will be paying for a slice of a fast growing business in a growing customer segment that you didn't have access to in the listed space until now, in the hope that the investors' fancy for such new age business models will hold up. Liquidity, stock valuations, and particularly valuations of cash burning startups like Zomato have been powered by generous funding by global private investors in recent years who have had access to ultra cheap money thanks to near zero rate in the developed market like USA. Current market conditions are also conducive to Zomato for making successful offers. But if its liquidity were to dry up, as central bank across the world scales back the money they are pushing into their economics, or interest rates were to rise, the US Fed US has already indicated it will eventually hike rates. Narratives justifying valuations for EBITDA negative businesses could change. Should private investor and public markets revert to conventional investing, preferring viable, profit-making companies, Zomato-like companies could find funding hard to come by, which was easy up till now. So there is also an uncertainty for the liquidity which Zomato is presently enjoying. It is not sure that Zomato would be enjoying the same kind of liquidity to fund its expansion down the line. So now let's conclude what the analysis says. So no profit leading to negative P makes this mega primary offer a costly bet. Earlier, two loss-making food chain IPOs of Burger King and Barbecue Nation have rewarded investors in the medium term, but there were in the hotel sector that enjoys good margins, whereas this company is purely dependent on the third-party supply and is primarily in the food delivery business. This being the first mover in the segment, its listing performance hinges on ongoing uncertainty and the future prospects. National Restaurant Association of India (NRAI), Moving Competition Commission of India (CCI) for level playing field between restaurants and ongoing food aggregators is a major concern for a while. Being mega offer, chances of allotment are high. There is no harm in skipping this IPO with inflated valuations. So if you can take risk and you assume that Burger King IPO was also loss making business IPO, Barbecue Nation was also loss making. So if you think that this kind of complete market and this kind of demographic play is at offer, you might have some gains if you invest it from the listing gain perspective or a medium term perspective. The long term story, as we discussed, is not unclear, and since it's a loss making, there is no earning. So the money which you will be investing into it are not going to earn immediately in the foreseeable future. So if you at all you are interested in any kind of listing gains and willing to take high risk, you can invest. Otherwise, it is much better to skip this IPO at this reflected valuation. I hope this small video on the IPO of Zomato would be helpful to you in determining whether you should invest into the Zomato IPO or not. If you wish to focus on keeping and growing your money, please connect with us. I've got a YouTube channel, uh, probably where you are watching this video. Click on the subscribe and subscribe to the channel and bell icon so that you receive update notification whenever this kind of new videos are uploaded onto my channel. You can also read blogs at blog.planetwell.in. This URL is also a blog, but I have moved to another URL, blog.planetwell.in. You can also, if you see certain videos on my website, planetwell.in, there are third party good personal financial literacy website available for your financial literacy improvement, moneycraft.com. You can also connect with me by liking our Facebook page, which is a Planet Wealth, or join my financial well-being Facebook group. The best way to connect to me is to save my WhatsApp number on your mobile as Planet Wealth and send me a message. Add me your name so that I would add your number into my personal financial literacy broadcast group. Don't forget to save number, because unless you will, my number would be saved in your mobile, you will not receive my broadcast notification. So I hope ये वीडियो आपको हेल्पफुल रहा होगा. थैंक यू फॉर वॉचिंग दिस वीडियो और मिलते हैं अगले वीडियो में. थैंक यू.